With us now for analysis is Tal Reshef, Israel-Asia business consultant, as well as Niamh Ellis, business reporter for the Jerusalem Post. Thank you both very much for being with us.
Thanks for having us.
Well, Tal, let's start with you first. Why is their growth stuck at zero?
Well, it is something expected that many have predicted it in advance. Japan is in the middle of a long-term crisis that didn't start yesterday, not with this Q2 event. It started somewhere in the 80s, maybe in the 90s. Japan, a long time ago, has reached what is called the glass ceiling. The point that you reach once you're becoming too prosperous, too rich, the cost of living and the cost of production is getting too high. There is a limit to what you can do in order to create more GDP in your country. And Japan, for the last 20 to 30 years, is stuck somewhere. Mr. Abe, the Prime Minister, is trying to take Japan out of this swamp and to accelerate its growth. And there are many hopes. Me personally, I don't see the reason for those big hopes because Japan cannot do miracles. Japan has reached a point in which it has to accept that the days of glory are over, and they find it hard to do. And the results are very much expected, especially if we take into consideration not only the basic limitations of Japan's economy, but the slowdown in the Chinese economy, which is the great importer of Japanese product, and Europe, which is still lagging behind. It's not easy.
So you're saying those market movements are also having a component in this. Well, let's bring it to you, Niamh. The yen is now surging here, advancing 15-year highs against the dollar. What impact is that having with its economy?
Yeah, I mean, certainly that's going to have an impact, and there are a couple of reasons for that. First, of course, we saw the Brexit vote sort of shook up world markets, and the yen is considered a safe currency, much like the greenback, the dollar. So that's one of the reasons that it's going on high. And as Tal was mentioning, the stagnation in other markets is also adding to that strength. So Japan is, of course, having more trouble with exports, and exports were really one of the things that contributed to that low GDP figure that we saw in this last quarter. Now, interestingly, normally when we see these kinds of movements in the yen, we see Japanese companies really trying to sort of outsource and take long-term steps in order to maybe move their manufacturing abroad or things like that. Now we're seeing a lot more sort of cost-cutting measures, which implies that either they think they've outsourced as much as they can, or that this is something that's going to pass.
Well, that's really interesting because at the same time, it does seem like investors have confidence in Japan's economy, and yet we're seeing their economy just not produce.
I mean, this wasn't unexpected. This is very much on par, with what has been going on historically with Japan. Perhaps the specific quarter's numbers were disappointing, but it's not different from the overall trend that has been there in recent years.
All right. Well, Tal, let's speak here about Shinzo Abe's economic policies. What does this reflect, this data? Is this bad news, essentially, for his policies?
Yeah, it's very bad news. Even if I say that it is expected, still it is very bad news. Let's try to understand a little bit what Abenomics means. Abenomics is a series of steps that he has taken since he was re-elected a few years ago in order to accelerate the economy from the point in which other countries cannot accelerate anymore. And he was trying to put aside monopoles and to bring more women into the circle of labor. But above all, what he was trying to do is to pump money into the economy in order to accelerate the consumption, and with the consumption, with the demand, to push forward the GDP. This is basically the basis of the Abenomics. And what happens is that he pumped money. While doing it, what he did, among other things, that he was taking the deficit of the Japanese economy and making it even bigger than it was before. It is a very heavy price was for countries that is so deeply indebted like like Japan, and the results were not positive at all because the money that was pumped usually ran out to import cheap things from other countries, not in order to buy expensive things from Japanese producers. So we did not see the acceleration in the economy in result of this. They lost the money is out, the problems are still the same with bigger deficit, and the results of this quarter are just a big red light saying, okay, we have to accept that this plan doesn't work where we wanted it to go.
Well, Niamh, let's take it to you here. Do you think that this big red light, as Tal suggests, is going to get the average Japanese person not so hot for his policies anymore? Abenomics?
He's proved so far to be a very able political leader, so I'm not sure if the average Japanese citizen is saying it's time to throw him out. There's also a question if they think things might have been worse if it weren't for his policies. But one thing that I think is interesting and worth remembering is that when we talk about Japan's GDP growth, we usually think of it in terms of West's GDP growth, but they have a very different population growth. So when you look at GDP per capita, it might not actually be quite so bad.
All right. Well, thank you very much. Do appreciate you both coming on our program. Now, do stay with us. We have a lot more economic coverage for you straight ahead. The universal basic income already gaining traction in Canada and apparently now also in the UK. And also, we're going to take a look at a special sit-down interview with the CEO of AnySpeech, an award-winning company that helps people get over speech impediments. Stay tuned for all of this and more.